First and foremost on gold demand and the rally we've seen on gold. I don't remember any past year where we've seen a near 30% move in the yellow metal within a matter of a few months. Like we're talking about 8 months.
Yeah, no, it has been unprecedented, and I think caught a lot of people out. And it's been actually a result of those more traditional sort of physical drivers, rather than really a strong build up in investor demand. Although that has been positive, but we've seen ETF inflows actually remain relatively subdued for a large part of the year. So it does really give testament, I suppose, to the strong underlying fundamentals that market has been experiencing. But clearly now, with the Fed kicking off its rate cutting cycle, I suspect we'll get even stronger tailwinds with that sort of lower borrowing costs starting to result in much stronger investor demand. So I do expect to see ETF inflows pick up quite strongly, particularly if equity markets start to falter a little bit, and that will really boost those already strong sort of underlying fundamentals that have been present for much of the year.
I just want to take one more follow-up on that, on gold, before we delve more into the oil situation. On gold, the very aggressive targets of 3,000, 4,000 and beyond. Where do you see this demand momentum taking gold, given that gold miners are also rallying away, because you are seeing that demand-supply mismatch?
Yeah, no, I think the sky's the limit, to be honest, in gold prices. I mean, we do expect to see further record highs. We could certainly see 2,900 in the not too distant future. And as I said, I think the missing link has been that ETF demand, which has been a little bit soft, certainly in the first part of the year. But that I suppose in unison with that monetary easing sort of policy, which in the past has resulted in, on average, about a 6% gain across that rate cut cycle. So I do think that we could certainly see ongoing sort of record highs being hit for this market.